Good afternoon, Scott Rowland, T3 Live. Welcome to today's recap. It is Monday, so another day in the life, right? Went into the weekend, everyone was pretty much scared of what could happen, rightly so. You have Putin, if I said his name right, out there thinking that maybe he can go into eastern Ukraine, maybe guns could be fired with the technical damage that's kind of been adding up in the upper areas. Why not take risk down? So if you took risk down and you trade for alpha and P&L, you did or you acted accordingly to your process. I also took risk down. So when you come into a day like today, you gapped up 12, 13 handles, you could do, or 10, 11 handles, you could do one of two things. You could either get very frustrated and just start buying into the first move, which I don't recommend for the first 30 minutes. Or you could have just shorted the open, which I don't recommend you do in the first 30 minutes without a plan. Or you could have said, you know what? I'll do that every single time. If we break the 8, we break the 21, momentum leaders start to show faulty action. You have, news out of China, you have a Fed week, you have, the Ukrainian tension scenario on top of a plane, disappearing. Maybe you take a little risk down if you're a trader. If you're a macro investor and you do monthly flows, just stay to the course. This too shall pass. So if you came in today relatively light, you had to narrow down your time frame and have a plan and figure out how you can make some money. So what I'm going to do is first I'm going to show you the chart of the S&P with the spiders. You go here. Here's your macro chart that if you follow, not even close. If you remember this was your accelerated trend that broke. So, if you look here, what took place when we broke below the 8 and the 21 right around there, you triggered a bit of a correction down to the 150 days. So you didn't know what would happen this time after having an outside day here, an outside day here. So if you took some risk down, okay. So what I did is, or what I talked about today is, I said 185.80. If we can get above 185.80 quick, anyone caught short who didn't cover, who was trading for a big down open because of the over the weekend type of scenario, went into an oversold tape, the oscillator was like minus 35 or minus 40, probably covered straight through that pivot point, 185.80. So it created a very quick, if you were quick and grabbed it, congratulations, a very quick squeeze if you started shorting too early. This was level 1. And I do think we talked about level 2 resistance coming in somewhere closer to 186.60, 186.70. So what I want to do is I want to break it down in the 5-minute. You go to your 5-minute chart and you will see here is that 185.80. So this is what triggered stops very quickly. Boom, went through it. Huge squeeze. So if you were quick and you wanted to grab the longs and you did, congratulations. If you tried to be kind of cute and you wanted to wait, not for the easy type bounce, so not just to take out 185.80, but wait for a little bit bigger, you could have tried right around here, right when it put its high in 180. What was this? 186.77, came back off. At least you had a point of reference here, and then we slowly came down to retest this prior. Look at that, almost right back to 185.80-ish. I don't know why I was thinking 185.90. That was the wrong point of reference earlier today. And this could have been your spot to say, okay, that's all we get. Let me get out of the way. And if you did not chase this up open, you could have said, okay, now that we put a higher low in, let me look for some longs that I like, that I think could be worth buying, whether it was a financial, whether it was a tech stock, whatever it was. That was your buyable pullback. So here's the first 30-minute push, came off. That was your short versus the highs. And then after 60 minutes, you have a loaded trade against, because who knows, it could have filled the gap, it could have came in, and that was your strategic buy. So from there, it didn't really do much throughout the course of the day, but that's why people hate a gap up, because there's never that much traction after it. If it would have opened down, chances are if we went positive and screamed up to this level, I think traders would have been a bit happier. So that was how you had to, that's how I try and navigate a huge gap to the upside. Don't short right away. Wait till it squeezes that first level, which was 185.80, and then look at bigger resistance. So at least if you did play the cost average game, we were up like 1.2% in the first 18 minutes. You were able to trade out of it. And if you bought that first 30 minutes, chances are you probably sold that pullback, and then you were turned around like a dreidel, and it's not even Hanukkah. I also came in, I was like, oh, let me try and short Facebook. Facebook showed a little relative strength, relative weakness lately. I was like, maybe we can get a green to red move. And when the futures made new highs, it kind of rolled over. So on the VTF, I got short. And if you look at Facebook, it just shows you that a strong stock, I wound up shorting and making money, but it turned into a better reversal. And the reason why we have pivots is because that's where you make your adjustments. Facebook was as high as 72.59, so shorting it from green to red through a prior low is a little dangerous, but you did get some follow through before it put a low in about 80 cents lower and then reversed. And if you were still short, that's your pivot to cover. You could have played it both ways today. You go to the 5-minute and you will see, just to show you here. Okay, this was this was the open. Okay, opened into prior resistance right here, and when it was already rolling lower. Look at what Facebook did, rolling lower in the first 30 minutes. When in the first 30 minutes, look what the spiders did, went higher. So that was relative weakness. That was a signal to be a little bit short. So you go back to Facebook. It then took out, I guess yesterday's opening range, and then traded below 67.46 was the low. Came in, and I was done somewhere around here. I don't know exactly where, and I'm like, you know what? I'm not a good short. I'm getting away from it. And then if you look here on just say a 5-minute, this was a small red dog reversal, right? Traded through a prior low, which was on, this is a micro red dog reversal. People say, can you trade red dog reversals on different time frames? Well, here you can. Okay, this was the low here, 66.70. Okay, traded through that low down to 66.62, came back above, showed power, a little bit of a lower pivot, boom. And if you missed that, and it held higher, so here's your reversal, holding higher. If you were short, you should have got out of the way. If you knew where the daily red dog reversal was, which was right around here, that could have been your spot to cover, get long, and then from here, it went up a lot quicker and faster than it went down. And that takes you back to the daily chart on where you are right here, where now you have a red dog reversal. Here's the top end of the channel, and we'll see what happens if we can get above this high tomorrow. But that's how you navigate a trade, from trying to be cute to the short side to then buying a potential leader that is still above all the key moving averages and seeing if it could move in that direction. And then just to run through some names, Google. I know I tried buying it on Friday and I screwed it up. Take this out of the way. This acted better. It's still into all the moving averages. It's still hard to handle if you sold the 8th day and you were waiting for a buyable down open, you didn't get it, and you could have actually bought this. I think Sperling made money buying this after the open, and it showed some relative strength. You had to be really quick. If you look here on the 5-minute, you'll see, I guess this was just somewhat of a downtrend. It opened up, flagged, and then when it took this out, you had a quick move, and then it pretty much trended into resistance, where I don't know why I just drew that resistance there, but that's could have been from this morning, and a little pullback at the end of the day, but there was a trade there. Now, if there's more than that, I'm not sure. Apple, wishy-washy as usual. Apple, go to the daily chart, and I actually didn't trade Apple, but if you look here, you have your low, higher low, not much conviction here today in Apple. You still have your downtrend that's moving lower. It's below the moving averages. We'll see how it goes tomorrow. I don't have Apple. We'll see what happens there. The banks took off early and then really just sort of did nothing. Unfortunately, I didn't go home long with BAC. I actually got stopped out, I think, somewhere around here. And this was the spot I was looking for, but it closed on it into the weekend, so I didn't take it. And here's where it opened up and didn't do much, and we'll see. Probably need some time to be in this. Some of the other banks look the same way. Qualcomm looks pretty good. Just chart at the highs, above the moving averages. Tesla, still trying to build. This kind of looks like Apple, where it's holding support, but it's not looking like it's ready to go. I guess tomorrow, if it could get above this 238, 239, maybe it pops up into the upper end of the range. Twitter is nothing still. I didn't actually touch it today. Still just a tight, grindy mess to the downside. Zynga, I actually rebought a little bit today on the weakness. Not really showing you anything yet, but if you sold some strength up here into the 580 something down here, makes a little bit of sense. We'll see how it deals with the 21-day. It did close in the lows, so we'll see what happens there. Little stock that I've talked about a few times that actually wound up making my day, believe it or not, was this YOD. YOD has been in a tight range. We've been targeting this 560, 570 breakout, and here it goes. You look at the the volume, go basic studies, go volume, and there was a nice amount of volume here. And look at that move. Big move, sideways, top third of the range. There you go. I kind of kept my eye on it because this was something that we caught pretty early on, this candy way back here. And there's still commitment here. It's still going to the upside. So I figured maybe some would look to the potential YouTube of China or whatever YOD is. This is the electric version of what people call Tesla in China. But big volume on its way. Keep trading this thing. This is very, very active. I gave up on it, unfortunately, but I also wouldn't take it into earnings. But right down here, I remember actually we were trading this thing in this range, and it was such a wishy-washy stop and go, and then it took off, and then really look what happened when it took out this prior pivot. Boom. And then it's been tradable since, and that's where it is now. So hopefully you made some money in this one. I think guys in the VTF have been trading it back and forth. They also caught a little bit of this Moby, which had a nice size move. But remember, these type of names are very frothy, and they could pull in at any moment, and it's not for the faint of heart. So be careful trading them. But if you do it right, there is movement, and you can look at it technically. And when it went above this area, it went pretty quick. Just pulled off it. So now just know what you want to do here on big volume. What else is going on? In Netflix went red, still not looking great. Let's take the volume out of here. Still, yeah, this is not showing any strength as of yet. Still looks like maybe the 50-day. We'll see what happens if it takes out this low tomorrow. The casinos had actually a little extra strength today, whereas you had your reversal on Friday. This actually gave you a clue to be long this, right? It reversed, it went green when the market closed red, and then you had some follow through today. But it probably needs a little bit of time before maybe breaking above that. Let's see what Wind did. Wind didn't close green, but now a lot of these patterns look the same. Like the most bullish ones have put a little pivot in, had a bounce today, and now we'll see if they can go sideways before potentially going again. And that's really it. I'm not going to get too deep into what was today. People were trying to figure it out. Was it because the news is out? Did they buy the news? Was it because Russia didn't drop bombs? Was it because the sanctions weren't too big? Was it because we were oversold, minus 38? You know what? It felt like the whole consensus wanted the market lower, so it went up. The trends are still strong. I know we broke below the 8 and 21, but we're still above the 50, 100, 150, and 200. So you just got to pick where you want to live. And recently in 2014, we haven't had the most conducive setups, at least I think, for traders, where you want something to happen and the opposite happens the next day, and then you have to figure out how to make money. I don't know why that's been happening, but at times trading is a little bit more frustrating than others. Where last week every day was different. You closed strong, opened up, reversed. Vice versa, and that could create a lot of frustration if you're looking for follow through either way. At some point it'll get easier. At some point there'll be more clarity. But until then, take trades on the long side, take trades on the short side, stick to your macro course, and if you're not feeling it, just get green, bring your size down, and if you get a few green days, you feel better, and they become bigger green days. Listen, we have the Fed Tuesday and Wednesday. There's still a lot more action to come this week. If you go home today and you see the Dow up and everyone asks you, did you make gazillions of dollars? And you're like, not really. Don't feel bad about it. It'll happen again. Have a great night. See you tomorrow morning with Brittany. She'll be back.